Welcome to Two Simple Scalping Strategies for Market Session Opens, a Learn It Live webinar. My name is Thomas Atkinson. As always, I'm joined by Tyrone Abella from FX Evolution.
Hi everyone, and welcome to tonight's exciting edition. Scalping strategies for market opens. Very keen. We've had a lot of requests for this, so a lot of people like to get involved in market open. So looking forward to getting into it, looking at some of the strategies and maybe some of the things that are setting up tonight.
Yeah, we'll probably be focusing a little bit on the 5-minute charts tonight, so a little bit different type of strategies. I've got some interesting stuff, and we'll be using probably MetaTrader 5 tonight for everybody. So just to get started, risk warning, the information provided in these videos or webinars has been produced by third parties and does not reflect the opinion of Pepperstone. The information has been provided without any alteration or verification. And it's always important to seek financial advice when necessary before making any financial decisions.
I just want to check, is everybody just seeing a white screen at the moment, or are they actually seeing, because all I'm seeing is a white screen with the name of the session. Can you just pop it in the question window if everybody can see?
Most people seem to be seeing slides. All good, blue. All right, it must be just you, Ty. That's okay. As long as everyone else can see it, that's the main thing.
Okay.
So what we're going to be covering today, we're going to be taking a look at some of the best timeframes for use of scalping strategies. We're taking a look at how to build a scalping strategy or system based on a points-based approach, something we talk about a lot in our webinars. And we're looking at some market conditions to look out for before using a scalping strategy. So we've actually got a little indicator on our MetaTrader 5 tonight as well, where it just shows us the session opens, because of course a lot of tonight is about how do we define like a time frame where we want to scalp, because many of us live busy lifestyles. We may not always have the opportunity to potentially trade 12 or 14 hours a day. We may only have a few hours. So often session start times, or before, let's say, the London session, or even before the Asian session or before the US session opens, can be very good catalysts for our scalping. You often see breakouts happen. You see little bits of news kind of coming out that push things past support resistance levels. So I'll be taking a look at those. Just before we get into it, announcements. It looks like US share CFDs are now live on the Pepperstone MetaTrader 5 platform. And I believe you can enjoy a 50% off Pepperstone US share CFD commissions until 16th of August. I saw that. So for anyone that's interested in shares, you might want to check that one out. So what is scalping? Of course, scalping is trading style specializing in taking profits on small price changes. It's very time intensive, so why we want to use potentially market opens, because it's also very chart intensive, and we may need potentially what we used to do, Tyrone. We used to have about, was it a 12 screen wall filled with just currency charts, and we just would look at them before opens and make our decisions on which ones we were most keen on, and we'd have one for each one of the majors, and then it would have all the cross pairs on it. So you remember how intensive that was, yeah?
Very intensive, and I'm not sure it did us any good. We had screens set up even in a vertical scale too. Like we had, every screen had 4 or 5 charts in it, but it does turn into a little bit of analysis paralysis. So it's certainly better honing in on particular times when scalping can be effective. So that's what we'll be looking at tonight, because market opens are ripe for that sort of trading.
So of course, more transactions in scalping, but often higher fluctuations in account balances. It's just important to note that you will have more failures when it comes to scalping, and a lower potentially percentage of winners to losses. And that's just the nature of it. You're taking a lot more trades, and you're taking it on a smaller time scale, and therefore bits of economic news that come out, e.g. What we call like medium importance news or even low high importance news, will fluctuate and potentially kind of change some of your trades and how successful they are. So you really need a strict entry and exit strategy. I've gone over this slide before a few weeks ago where we talked about scalping as primary versus supplementary. I really like using it as a supplementary to our other trading techniques. I think there's different times of the year that you want to use scalping techniques, and then there's different times of the year and different market conditions where you won't want to, and you may want to use more of a swing trade or more of a trend-based trading system. So always think about whether you want primarily to just scalp, And then you'll need to know that you have to spend multiple days per week, and you've really got to say, okay, I'm going to trade maybe the Tuesday, the Wednesday, and the Thursday, because they're the most, I guess, volatile days and the probably the best days, wouldn't you say, Tyrone, to trade when it comes to scalping. And you've got to kind of be consistent in doing it every week. I mean, that's how I feel about it. I think it's more of a job that you've got to sit down, you've got to be there at those times. What are your thoughts on this one, Ty, after doing it for a long time?
Yeah, you do definitely have to dedicate particular times. The problem with, well, a lot of people, especially beginners, have issues with scalping is where they feel the need to trade, whether a trader's there or not. It's very important that you don't, go into that mindset. And this is where obviously, risk management comes into it, because you are going to have, a decent share of trades that don't go right, because of course the smaller time frames mean that the market is a little bit more volatile and there are a lot more fake outs on the smaller time frames. So you need a good risk management system in place, and you certainly don't want to be doing things like revenge trading or trading because you feel you need to, because they're the ones that will get you in trouble. So, and look, there's always, even on the smaller time frames, there's still generally quality trades to be found most of the time. It's going to be very rare that you trade a couple of market opens where you're not going to get some good opportunities to get into the market on several different currencies. So no, we'll certainly look at some of those tonight, but it is risk management is probably one of the most important things, because this is the one that can really bring you undone if you're not careful.
So when we talk about market conditions, we really want to know whether the market's range bound or trending on the larger timeframes. We've always mentioned in the past that the best way to do this is really start to learn things about channels and start to learn about range bound markets. And I think it's important, no matter whether you want to be a scalper completely or not, you should always look at the daily, 4 hour, 1 hour before you move down to the 5 minute, 15-minute chart for your scalping session. So start to look at things like range bound strategies before that happens, and think about channels, which we'll go over in a second, and then think about, is the market range bound? That will change where you should be taking profit or not, and it will change your expectations. So we'll talk about how the market's looking today, and therefore how we change our strategy for that. We also want to use time frames. I actually quite like 5 minutes coming into market opens. I think they present some really great opportunities for scalping. So 5 minutes is actually a good one for that. And 15 minutes is always a go-to for many people out there. So let's jump straight into the market and talk about what we saw actually during the opens today. So here we've got on the 1 minute actually, but here we've got basically the pound US dollar, and we've got a couple of highlight zones here that represent the different timings. So we'll just highlight a few things. One thing I want to highlight coming into this session open, or where this green starts, is that we had a very nice little support line on this 5 minute chart. So we had multiple touches to this 121 kind of 56 area, and then we saw that it broke through right around that open, or the open was testing it. It then broke through, created like a bit of a double bottom. It's often what we see, a bit of a fake out. Didn't go very long, only went about 10 points, and then created a really nice double bottom, reversed, really, really nice kind of uptick here straight into the previous resistances. And then we saw, of course, the sell-off occur. But there's so many trading opportunities that present themselves here. So, Tyrone, when we're looking at something like this, and we'll talk about role reversal, we'll talk about certain patterns, but one thing you want to be looking at is the market range bound, or is it at a critical zone of support or resistance on the 5 minute, 15-minute chart before a market opens? And if it is, often the market will push past that level, and in the first 1 hour, generally 1 hour block of trade, and usually half an hour leading up, you'll generally see some setups on one of the major currencies when the markets are nice, volatile, and set for scalping like they are since last week's news. So we really like looking at this chart. Love this break for support. I even kind of like the fake out. Often you may have even accidentally got in here and started selling. But the key is to be able to recognize, well, the market conditions have changed, and then be able to get back into it. So, Ty, I mean, what do you think about, we'll just, as I bring this up and show everyone what we're talking about, what do you think about breaks into support and resistance before market opens?
Yeah, most definitely. They are they're key to actually, trying to actually work out which direction the market is going to. You've got to be mindful that you will get a lot of fake outs, but sometimes there's actually nothing wrong with trading that. If your expectation on a scalp, and probably expectation is probably one of the things that we need to talk about a little bit tonight as well, because you need to be mindful that, when you are trading the smaller time frames, the expectations of your trade need to be in line with what's actually happening in the market. Now, by that I mean, yeah, you're not going to generally scalp and look for 50 or 60 pips, right? So, when you are scalping, you're generally going to be going for that maybe 15 or 20 pip move, sometimes 30 if the market's fairly volatile, but you're not going to be going for those really big extended moves, because that's generally not going to happen. So, and when I say that, sometimes even a little mini fake out can actually get you those moves, because they can be explosive enough that it can move 15 to 20 pips very, very quickly. Like when you're looking at a trade like the pound USD especially, it can be, we've seen it put on 40 in a 1 minute candle, and then return it all on the very next one. Happens all the time. So as long as your expectation for the trades that you're placing, the time frame are in line, even fake outs can still earn you, what you're basically looking for that trade. But support and resistance is key to that, because a fake out is generally going to occur around that time, especially on the market open.
Yes, the fake out happened here where we can see, and this is tonight, obviously this happened in tonight's session, where the support was broken. I had that highlighted before, and then it created a really nice, what they call double bottom pattern, where we can have equal lows. We've also got what's called MACD divergence, which if you watch our previous webinars, you'll learn about, something you do want to check out. And then we've got a nice little cross of our favorite moving averages, just the 20 and the 50 moving average coming into the break of the intervening trough. So nice little bit of kind of consolidation here before the break occurs. The cross happens as the break occurs. As many people be aware, the distance of the double bottom is kind of what you're looking for, and that could be potentially your first take profit. But another great thing about this trade tonight is it went on and kind of hit your second take profit. And you have to be realistic with trading, so when it comes to scalping. So where do we think that the first potential take profit or problem zone is going to be? It's most likely going to be here at the previous resistances, and the second one is going to be at the highs up here. And then you can see the market reverses and actually goes on in the direction it initially broke. So a lot of things going on in this chart, a lot of things happening with the pound US dollar, but it's a really good little scalping strategy to learn about double bottoms, double tops, and think about previous resistances and where your profits will be. So maybe you might have said, okay, I'm going to take 50% of my trade off here, and then potentially the rest off at the highs up here. And that would be a great success. I mean, here, Ty, potentially we've only got a 13 kind of pip stop loss for maybe a 13 pip payoff initially, and then up to a 30 pip payoff. So big moves on the pound, and that's because at the moment the markets are very volatile. So it's actually a great time to scalp. I mean, what do you think about that time in terms of this trade overall? We've got that MACD divergence, we've got the moving average cross, and the double bottom. That's what you really want to see, isn't it?
Yeah, it's classic. It's absolutely classic. And look, the thing is, the great thing about scalping, and we preach this all day, every day, that all no matter what time frame you're on, patterns work regardless. Okay, it's just the expectation of that pattern. So I mean, it's a perfect example there of a double bottom with MACD divergence. Like, that's an absolute classic. I would trade that on a weekly chart. I would trade that on a daily chart, and I would trade that on a 5-minute chart. It's just one of those ones where you've got it, especially when you think it could have been a potential fake out. Now, yes, it's got to break a support line, or what's going to be resistance now, which was support. But if it does, you're going to get a pretty nice move. Now, remember, the expectation of this trade would have been the length of that double bottom, which is about 13 or 14 pips, which I think we just mentioned. But, quite often, especially after a bit of a fake out at a market open, these patterns can significantly move, sometimes 2 or 3 times the actual allocated amount. So if we were expecting 15 from the pattern, it's not unusual to see them move 30 or 45 pips, just because of the market volatility that is around, especially a London Open or even a New York Open, depending on which market you're trading. So it is important to remember, and it makes the learning curve a little bit smaller for aspiring technical analysts out there, that once you learn what the pattern expectation is and the things that drive the pattern, and by that I mean like a double bottom or a double top, it works in every time frame. It's just really the take profits are going to be relevant to the time frame that you're on, but always look out for them because they make scalping very easy.
We'll just quickly skip over to the euro here because, and again, we'll have some slides to go through this for any of the beginners out there, but support was found in the Asian session over the euro US dollar, and this is the 5-minute chart again. So coming into the session, we can see just before the session, the break happens. Often does happens, why we recommend actually coming into the markets about half an hour before the session opens. It then tests that point, finds a bit of what we call role reversal. We'll go through that soon. And we can see the moving averages have also crossed into the break. These are the kind of things you want to see when you've got the moving averages crossing at the same point that it breaks the support, and it happens at the beginning of a session. You'll probably want to look for short opportunities. And what we'll notice here, and we'll come back to this one, Ty, again, is there's actually been entry after entry after entry. And the most important thing is the market during the Asian session had really tested the highs and found significant resistance. So this is another one where you'd want to bring in your MACD indicator and then see whether there was divergence, which in this case, multiple levels of divergence. So a lot of things, again, you can see how we're bringing across a lot of the things we do on the 4-hour daily, and we're just using it on the 5-minute, and we're using the moving averages to confirm the break of the price action. And that just gives us the confidence that we know the other traders are there with us. So for anyone out there that's wondering if we're recording this as well, it will be on YouTube for you to watch. But the moving averages are the 20 and the 50 exponential, and we love that. And there's a few great things here where it comes and retests multiple times and continues in that direction. So something definitely to learn there. Okay, we'll jump back into the slides and we'll talk about just how to identify a channeling market, and then we'll have a look at a live chart that's actually been channeling. So to identify a channeling market, we really want usually 2 touches to each side. So here we've got 1, then we've got 1 on the other side, and then 2 touches. And then when it hits this midpoint, that's how I like to identify a channel. So we've got multiple price points of action where the market has been unable to break to each side, either break the resistance or break the support. And if you ever see a market coming in, let's say before your London Open or before your US Open, and it's in a channel, it's perfectly reasonable for you to set potentially sells above up here when you're looking at maybe candles. You set alerts and you wait for potentially trading in the channel, or when it breaks through, you set alerts for the break of this channel, and then you start to see if you can get maybe a buy side or a sell side trade. So here would be if it broke above, we'd technically be placing a stop loss down below, be taking the distance similar to that double top or double bottom, and there's our take profit level. But it also signifies that the previous session had been broken. So very, very important to learn your channels. And we've covered this so many times on YouTube, Pepperstone's YouTube, you'll be able to check those out. Here's double bottom, and of course it's important to learn both double bottom and double top patterns, very similar to what we had before with the pound US dollar. You can see how we would potentially set this up and where we place the stop loss. And the great thing about this type of trade is that, yes, it's usually a one-to-one type of trade, but as we saw before, you can, if you identify other strong resistance or support levels, potentially leave some of your trade on in the scalp to get that higher than one-to-one risk reward. So that's something you can definitely check out. So let's have a look at the US dollar yen. I actually highlighted this one coming into the session and where it is now. So this is the US dollar yen on the 5-minute chart. And what we're seeing here is we're actually seeing the market kind of range bound. So it's stuck within this zone. And that's really, really important, because if it broke to, let's say it came into the US session and we were still in this zone, what do you think may happen? There might be potentially buy opportunities, Ty, like something like this, or there might be even sell opportunities. So a lot of different things could happen. And that's what we're really trapping. We're trapping the market right now, and we're saying it's range bound. What happens during the US Open? So for US traders out there, this is the kind of thing where you'd be setting up and you'd be setting your alerts, waiting for that.
Yeah, and either break on this side, like in a market that looks like this, especially if you're scalping, either break to either side would be fine. So really, it's just about waiting for the right one and then trading in that direction. We would like to see a breakout and then come back to retest the zone. That's an ideal for a scalp. That's a really ideal. That happens in the bigger time frames as well. But if it did happen to break out and come back and retest it, that is an optimal scalp really in the way we look at it, especially into a New York Open where the market is probably a little bit less volatile and trends tend to continue on once they do actually break out. So yeah, you don't have to actually pick a direction here. You just have to wait for it to determine which direction it's going to go and trade what you see.
Yeah, a lot of price action based trading and what we teach all the time is that you're trading what you see, you're trading what the market's telling you. So right now the market's saying, well, we don't know what the fair value of the US dollar yen is right now. We just kind of feel like it's in the middle here. Maybe they're waiting for a news announcement, maybe they're waiting for just a market session open. And when that happens, it'll probably go in the direction, and it will at least most likely go in the direction for the range of the current market here. So that's the kind of thing that we're thinking about. And I like the US dollar yen example here tonight just because it shows you guys the setup and what we could be potentially looking for. So hopefully, does that make sense to everybody out there? I'll let everyone answer us in the room. It does? Tom,
Yeah, it does.
Simon, few people coming through. That's good.
Excellent. Actually, look, we're actually getting quite a few requests to analyze some of the pairs that we're talking about tonight in greater depth. This is more we're sticking to the smaller time frames on this one. But if you are interested in looking at the live markets for some of the pairs that people are requesting, just I'll post a link in the chat window, and you can join our webinar that starts in about 35 minutes. So after this one directly, we're doing a webinar analyzing the live markets and talking about some of the teachings that we're talking about here as well, but applying it to the live markets with the bigger time frame. So I'll pop that in the chat window for anybody who would like to join us a little bit later on.
So another thing we want to do, and we've mentioned this, is optimize our entries. So enter based on confirmation, not on gut feeling. So one thing is when you're recognizing channel breaks or you're recognizing double tops or double bottom patterns, which I think make up some great scalping opportunities for you guys, you really need to wait until the candle has closed. And what we mean by that is if you're looking at a 5-minute double bottom and you're waiting for the break of the intervening trough in between and to break to a new high, you must wait until the candle closes. Unfortunately, in scalping, things can look very different. And we've all been out there and we've all traded a 5-minute chart and gone, okay, that looks like let's say a bullish hammer. And we get in and we think it's all great. And then 20 seconds before the end of that candle, it reverses completely, and all of a sudden it's just a nice big bearish candle. And that is what you don't want to be doing in trading. Unfortunately, most people have probably lost money doing that. You just need to learn from your mistakes. And it's not somebody that makes the mistakes that's going to lose long-term in trading. It's the people that continuously make the same mistakes. So wait for confirmation, never on gut feeling. And that goes for any trading style that you want out there. We also don't really like break-even trades with fixed pip amounts, and this is especially important with trading in scalps. Usually, most people will have, let's say, a fixed 15 pip take profit or 20 pip take profit, and then they'll fix their trade. And look, we did this many years ago. We used to fix it, let's say, 5 or 10 pips up. We would break even our trades. Try to break everything down to percentages. So if you're expecting 30 pips, because that's what the trade's giving you as an opportunity, why not only break even the trade when you reach a certain percentage? So maybe that percentage is 65% of what you expect or 70%. By doing that, you're market adaptive and you won't be taken advantage as much of by the human psychology the market knows. So always break everything down to percentages if you can. It's really helpful with scalping. I mean, Ty, that was a game changer for us. I can't say it enough. It sounds boring, but it's important.
But it's the truth, and that's the thing. Look, sometimes you want the easy way, but really, the right way is the way to trade. And the hard lessons can be learned going the other way for sure. But if you follow these rules, you're not going to go wrong.
Another
It
thing
turns
is
it off
spend
into a very
time.
pleasant.
Yeah, that's right. Turns it into a bit more pleasant than not pleasant. Spend time learning the way the market moves. If you're trading, let's say, the London Open, it's probably going to be great to have in your pair base things like the Euro US dollar and the pound US dollar and possibly the Euro pound and those kind of things, because logically they're going to move the most coming into that session. Now, if you're trading the Asian session, you might want to trade the Aussie US dollar, the New Zealand US dollar, and possibly the US dollar yen. Those kind of pairs are going to move a lot during the beginning of that session. So it's very important to think about what you're trading and think if it makes sense. So I actually personally love the London Open. For anyone out there that has that opportunity to trade that time, I think it's one of the best in Forex, Ty. And it's probably, I would say, one of the most volatile because you get all that European news that comes out, and you may not need to even worry about that, but you've also got that pound news and you've got so many markets open. And even during the London session, you have the US opening as well. So it's like that double whammy, pretty cool time to trade. Another thing you'll want to learn, and this kind of comes to the second type of strategy that you'd want to use when it comes to scalping, is role reversal. Learn role reversal and learn when this kind of thing happens. And we've got a good example with the pound tonight and the euro. So role reversal is where a point of resistance acts as support or a point of support acts as resistance. It's really important to learn this. We use this slide all the time where we're saying, okay, the resistance here on the Euro 4 hour, could be a 5 minute though, has been met multiple times. It's been tested. It hasn't been able to break through. And then at some point here, the market's broken through and then that point has acted as support. This goes for indexes. This goes for shares. This goes for everything. Role reversal is that human psychology of when something comes, let's say here, breaks through, reaches a new high, what people are doing here is they're buying it because they go, oh, it was cheaper than the high. We're still really confident this is going long, and we can see that that was a point that was really hard to get through. So it's that human psychology that comes in, and that's what makes role reversal so special. So you really want to be trading that. And when we have a look at, let's say, the euro tonight on the 5 minute, what you guys will notice is that the support becomes the resistance, the support becomes the resistance, and the support becomes the resistance. So hopefully everybody can see that, but once this broke through, support became resistance, support that broke through became resistance, support became resistance. And this is our opportunity as scalpers to potentially, if we'd missed the initial trade, get into the new positions. So can everyone see that? Can everyone see how powerful this idea of role reversal, once we've identified a beginning of a new trend or a break of a key support into a market open, can be used to get us into this trade, even if we're a little bit late?
It happens all the time, and it's just so easy to follow, really. And you can see not only is it pulling back into the role reversal zone, but it's pulling into the key moving average, which is a 20, which for all of you who follow us, we do these webinars every single week. All of you who follow us know that that's our religious MA to go to, and here we go. So
And when you've
it's absolutely
identified
classic. Yeah.
when you've identified a really strong break like we've seen here, Tyrone, and we see it into the market open, the 20 is such a great place to go to because it should be breaking aggressively and it should be coming back and testing aggressively because we've correctly identified the zone of the break. We can also have a look at the pair and then look at the larger timeframes and see whether that makes sense. What is the trend generally on this time frame, on this particular pair? Has the trend been down? I know the pound definitely has been very weak coming up, and the euro had a really big break last week and then obviously has retested and come back up. But overall, the trend for quite a few weeks now has been down. So some really great opportunities, and role reversal is something you've got to bring, or we think that you should bring into your trading techniques and add it to everything else. few people here have asked whether we use fibs. Yeah, fibs are great. You can use fibs to test role reversals as well. So if you add things like, let's say we take a fib of this point here, and you can see that the fib is the 50, it just adds to the potency of the trade. It adds to how many people might be there. You've got your fib traders there. Another reason this zone's quite nice is when we're looking at it and we're looking at the market, we can see that this level has acted as pretty strong support in the past. So it's probably going to be a very good resistance level on our little 5-minute time frame. Green MA is a 200 for a few people out there that have asked.
Yeah. So the other thing that is really important when you are scalping is actually understanding the price action that you're seeing. So it's really important to understand the candles, what price is actually telling you through the candles and through the patterns. So one thing that we are doing tonight is we're actually giving away our price action module. So for anybody who hasn't actually done that, I'm going to pop in a link in the window, so it's actually free for everybody to do for tonight. We've been doing this promotion for a couple of weeks now because we think it's really important for people to understand what price action is actually doing, and it's never more important than when you're actually scalping to understand what everybody else is actually seeing and doing. So I'm gonna pop that in the window now. Anybody who would like to do it, it's free to do if you haven't done it already, and yeah, enjoy, because it's a very, very powerful thing to know what price is actually doing, because it is truly the leading indicator. We can have all these moving averages on the screen and follow them religiously, but price is really the leading indicator that we want to follow. And a lot of people, unfortunately, don't understand how to actually read it. So yeah, for anybody who hasn't done it, yeah, jump on and do that module. You'll find it very, very interesting, and it'll certainly help you scalping.
Absolutely, like that. I mean, yeah, it's really, really cool that we're able to do that and give that one away, because we put a lot of time into figuring out high quality ways of defining trend and also defining the candles. So a lot of people don't even do the groundwork when they start. You often just add indicators onto the charts, you add moving averages, and you go, okay, well, I know that when, let's say, the 20 and the 50 cross, that means that we're selling. And that's all they think about. They take that easy way out. It's better to actually learn what the bars are doing, what the candles are doing, and how trends start and stop with price action itself. So if you were looking at a chart and it had nothing on it, that's what you want to be able to read, that, because that's fundamentally the beginning of your technical analysis. And a lot of people unfortunately skip that, and we do it in everything in life. But yeah, check out that module, guys. You really enjoy it.
It's
Awesome.
in the chat window now, so you'll find the link in the chat window. So just have a look where you would see the chat. You can just click on that link and you'll get free access to it.
And we've really never done that before. We've never given that one away until, as we said,
last week and
couple
this week
of
are the
weeks.
first times we've done it. Yeah, so because we think it's important. Like I said, we really want to pass on as much knowledge as we can in these webinars, and yeah, we know that people will get a lot of use out of that. So yeah, definitely use it, because it will make a very big difference, not only to your scalping, but also to your medium and longer term trades, because price action is everything. I couldn't emphasize that enough. It's the one thing that we didn't learn early enough, or yeah, we would have been probably way ahead. It took us a long time to work that out, but it's very, very important.
We were the kind of guys that we learnt from mistakes, but unfortunately we had to make those mistakes, and we don't want everyone to have to do that, because it can be painful. You don't want to necessarily go through those things. When you see a GFC like we were trading, it's an intense time. There's massive volatility, and the market is a harsh teacher, isn't it, Ty? So you're better off learning the right way first than learning the wrong ways and going down that line.
It is a harsh teacher, but it is the best teacher, because it's the only one that's actually going to show you, really your way forward. Now, what a lot of people have asked is scalping profitable in the longer term as well? So I'm going to answer that question for everybody just quickly. It's because look, we have said many times that we don't scalp for a living. We used to, yes. We didn't stop scalping because it wasn't successful. We really stopped scalping because the time that it took away from us was probably the the definitive factor there. Like when we started going to the sort of the medium-term time frames and the longer-term time frames, it gave us a lot more mobility to do other things. So it really comes down to, what your availability is time-wise. Now, the good thing about scalping is, like we said earlier, you can say you're going to do market opens only, and that could be, maybe an hour or two a day, which is perfectly fine. But if you want to, sometimes people who want to trade a little bit longer than that, you're going to get some flat spots. There's no question about that. So it really comes down to your expectation of what you want. There is absolutely nothing wrong with scalping, and we certainly encourage it for people when they're learning, because it is sometimes the best way to learn, because you see a lot of market action and you spend a lot of chart time, seeing the markets play out. Patterns play out the exact same way on the smaller time frames as they do on the larger ones, just in a different scale. So it's not like you're learning something that you're not going to use down the track anyway. Patterns play out exactly the same. Price action plays out exactly the same, and the indicators are really telling you the same thing. So it's really, really important to have that chart time, and scalping certainly gives you that. We should know. There were times when we were trading 16, 18 hours around the clock. We were taking it in turns to make sure we didn't miss any market action. But it taught us a lot. Probably not what not to do more than anything else, but it's certainly
That's true.
it was really, really important. So don't be afraid to do it, but don't feel, and this is probably one of the number one rules that you really should follow, is don't feel obligated to trade because you've spent a lot of time in the charts. If the setup's not there, just don't do it for no reason. That's probably a really, really important lesson as well.
There are going to be some times when I hear it all too often. People say, I'm going to make 20 pips a day. That's all I need. And they work out a calculation and they say, I'm going to be rich. It's the market doesn't always present great opportunities. Remember, I think the market only trades for something like, trends for only about 4 to 6 months of the year heavily. So you're not always going to have, let's say, a trending market. Sometimes you're going to have a range bound market, and you need to be aware of that. So that's why we like that primary versus supplementary style kind of. Sometimes there's time for great scalps. Sometimes there's time for great swing trades and trend trades. So step 4, target higher multiples, something you really want to do. With scalping, a lot of people unfortunately take under 1-to-1 trades too often. Now, we don't really recommend you go too far under 1-to-1 because you need really high statistics and probability. Otherwise, it's just common sense, but you really want to try to get more than 1-to-1 trades if possible. And sometimes good looking trades will not always meet your criteria, and that's okay. So it's about practicing discipline and finding as many reasons to be in a trade as possible. So one of those type of things, it's just a really brief one. You want to create a trading system based on multiple entry criteria, not just one, and you'll want to have some form of business plan effectively for your trading. Your trades are effectively a business, and you must have a plan for that. So whether it's printing off a couple of reasons on a laminate piece of paper and ticking them, and then just scrubbing it off and ticking them again, whether it's taking pictures of the trade before and after and going through that. I find a lot of people, unfortunately, don't keep up with taking pictures of it. Even if you just snapshotted every one of the trades, highlight a few things with a highlighter on maybe a snagging program, and then just leave it in there and review them at the end of the month, you'd be surprised how many trades you wouldn't be taking again, because you'd be learning from it. And we forget what we took maybe yesterday in scalping, moreover what we did 2 weeks ago. So you'll never learn before you start tracking it. It's very important to do that. So patterns such as this, we could be looking at maybe double tops or double bottoms, like we saw that double bottom on the pound US dollar. We saw it break through that point of support resistance. We saw the candle confirmation. In this case, it was breaking through the intervening trough, and we didn't have a fib retracement, but in this case, we did have the moving averages crossing. So maybe that would be another 25 points we could add here. And if we didn't have 75 points, we wouldn't even be placing that trade. So there's just a good way of, these are arbitrary numbers, we've made up these points, but you can see that no matter what type of system you want to trade, bringing together multiple reasons is the key. That's where I guess our press-it comes in, Ty. This is something we do. It's in our advanced course, and it's our kind of trading strategy. So it's where we base things on price action, risk management, our ELD system, chart patterns, indicators, and charting techniques. We really like to have one of each one of these reasons to be before we place a trade, and we score it out of a certain amount of points. So you can actually put that into the system, work out the points based on what you're seeing, and then place your trades based on that points-based system.
The Pressix system actually gives you a star rating for that trade, so it actually tells you where you're at, whether that trade's actually a 4-star trade, 5-star trade, or a 3-star trade. So it's and the P, the start of it, and this is why we rate it so importantly, is stands for price action, and that's the module that you guys have all received on that link. That's why yeah, we rate it so highly, because it's the #1 thing that actually leads the way for every trade that we're looking for. So we yeah, can't underestimate how important the P for price action is.
Okay, we'll hand it over to a few questions and answers. You guys have been really vocal tonight, which is awesome. So many, I think Tyrone's answered a few questions, which is great. I'll try to answer a few of the big ones now. But to get what you should get out of tonight's webinar is probably that you want to be waiting for confirmation whichever system. You want to have a points-based system. And in terms of the type of 2 simple systems we're kind of saying is good during market opens is look for support and resistance breaks coming into the market open, so either half an hour before or around there, and then look for role reversal points on that 5-15 minute kind of charts when that support resistance has been broken. So those 2 types of things can form a great base for your technical strategies. So we probably suggest you have a look at that, even watch this webinar again to see what we're talking about, but hopefully that does help you guys get a little bit more information there.
Do you want to just answer Ryan's
yes.
question here about time frames to trade, Thomas?
Okay, sure. Which one? Ryan. Yep. Okay, I said Ryan's always got a big question here. Let me go through it. What are the best time frames for someone in Australia to trade? There is more volatility in the London US time frame, but being in Australia, it's hard to scalp at those times due to the US trading at midnight. Look, Asia, yes. I mean, if you're working, often it's quite hard to trade Asia as well, because that opens kind of when the general work hours are. We really like London. I think Australians have a pretty good time frame. In fact, Perth guys have probably the best, because they're a little bit behind the eastern states. But yeah, I think London opens a perfect time to look at scalps. It's usually straight after kind of the working day for most people. And I'd certainly say that one time in London's just a great time.
It is, because you get the moves, and then at some point it definitely settles down. The US is definitely a great
That's gonna
one.
be tough.
It's a tough one if you work during the day, because you need to be up sort of at 3-4 o'clock in the morning. But at that time of day, it's or that time of night, but day for them, it's fantastic trading, because patterns really make sense and trends seem to flow really, really nicely.
So I'd probably say the London Open's great. For anyone that wants to trade non-scalping markets, again, Australia's not bad, because we see in the morning before the work hours, we see the daily close. And the daily close is incredibly important, and we'll talk about that in the next webinar we're running. So you probably should post that one as well for anyone that missed it, Ty. We'll be doing a webinar in the next 15 minutes.
Yeah,
as well.
I will repost it in the window, because we are actually, if you want to see how powerful the London market actually is, yeah, join us in the next webinar in about 15 minutes, because we go through the London Open, or basically the London Open. We'll see that price action and see what price action is happening now. So I'll pop that.
I will answer 2 more questions. So many questions coming in. Here's a good one. How long do you stay in a scalping trade? Is it 5 minutes, 15 minutes, 30 minutes, or 1 hour? If you're trading a 5-minute scalping strategy, let's say that double bottom before, you probably don't need to be in the trade for too many hours. However, it's not really dependent on the time. It's more dependent on what your expectations are. So like we saw with that pound, our expectations initially were just the distance of the double bottom, and then we also had that different expectation of the high. So yeah, 5 minutes usually only be in for a few hours, but during the Asian session, it can be slower, so you can be in there for a bit longer. Heaps of questions.
Wow, this has been the most vocal group we've had in a very long time. We're up to about 150 questions, which is amazing. So look, we'll try and we'll do our best to answer some of these questions in the next webinar as well, guys. So if you, like I said, log in if you want to. It's starting in about 15 minutes. We'll try and answer some of these questions on the fly as well. So
quick question here about trading gaps. It's probably less of a scalp kind of question, I guess. Yes, there is percentages behind gap closes on Mondays. So what we're talking about is the close of the market on Friday and the open of the market on a Monday. But I would need to look into that again. It's changed a lot from where it used to be. But yeah, trading gaps is fine. I don't really see the point of doing it though, because you've got so many great opportunities coming into market opens. So nothing wrong with it if you get your stats on it, but probably just do the market open. Seems pretty good. All right, guys. Well, thank you very much for all your questions. Sorry if we couldn't get round to them, but love all of the interaction tonight. That's great. Hopefully everyone's enjoyed it. We'll see you in the next one, or we'll see you in 2 weeks to talk about some other great stuff.
Yep. Our next one with Pepperstone is, our next Pepperstone webinar will be in 2 weeks it'll be Wednesday fortnight. So yeah, if you're not joining us in the next 15 minutes, we will see you in 2 weeks time. Thank you for all your questions, and hopefully you'll have taken something out of this webinar, and hopefully you all enjoy the link to the price action module, because it is really important. Take the time to do it and make sure you get all the quizzes right, because we do see all the answers, okay?
You sound like a scary teacher there, Ty. All right, see you, everybody. Catch up.
Good night.